Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you are all having a great day. I am the Vortex Trader and today we are on the DAX40 looking to get in on the 4-hour time frame. Let's get into it. So, what do you guys notice on the screen, right? Looks a little bit, let's say, overwhelming. Let's delete this. I want to show you guys this new strategy that I have been working on, and I want to explain how I'm going to be using it to look for a long position on the DAX 40. Right now, let's remove this. Let's remove this. We can see that yesterday price came up on the 4-hour time frame, guys. This is the 4-hour chart, and we can see that we poked into this daily resistance zone right before getting rejected quite massively and falling around from the top to the bottom around 2.5%. Yes, so that was quite a drastic fall. Is that enough to say that we are now in bearish territory? Is it enough to say that we are now looking for shorts, or are we still looking for long setups? Now, for me personally, I am still looking for long setups, right? If you guys notice these green and red candles, these are zones where I have been practicing this new setup, and the ones in green are obviously the winners, the ones in red are obviously the losers. All right, now let me explain this strategy to you, right? So this strategy uses an indicator called the Bollinger Bands, right? Very popular indicator. Lots of people love trading with this indicator. I myself do enjoy it from time to time. And for this specific setup, we need the Bollinger Bands because it involves buying when the price is at the very most bottom part of the Bollinger Bands and selling when it hits the top and vice versa. However, we cannot just jump in and buy every time price touches the bottom because price could continue to go lower and touch the bottom further and further, stopping us out 1,000 times before maybe eventually jumping and going to the opposite band, right? So we need some other things to help us produce and construct a setup that we could use to our advantage, okay? So what we are looking for is indecision in the market, right? We want to see once price has pierced the bottom band, which we can clearly see it has right now, right? We want to see a candle next to it, right, that shows indecision in the market. And we can see that right here with this candle right here, all right? We then, after that, want to normally see a bullish engulfing candle of some point, of some sort. Now, this candle was once an engulfing candle, right? However, the bears have come back and we have wicked drastically lower, showing that the bears still are in control. So we cannot just jump in now because price has pierced the bottom. Okay, we need to see an engulfing candle. So maybe this candle has 18 minutes left before it closes. So it is possible that it could climb its way back up and become that engulfing candle that it once was about half an hour ago. Or we wait for the next candle or the candle after that to become an engulfing candle. All right, now I'm going to highlight a zone here which is clearly resistance. Right? We can see this because price has been rejected once, twice, and now clearly thrice, right? 3 rejection wicks, right? We need price to close above or within this zone, a solid closed, to prove to me that the bulls are back, at least for the time being. Okay, once we see a close above or within this zone, then we can start looking for a setup to go long. And how would we do it? We would take our Fibonacci retracement tool and we would go from the bottom of the engulfing candle to the top of the engulfing candle. We would then extend it out. All right, that is step number 1. Extend it out. All right. Remember, we have to see a close above or within this resistance zone. Okay, then we would wait for price to retrace to the 0,236 price level. Let me thin this this little arrow out. There we go. Okay, we would wait for price to retrace once closing above or within this yellow zone, retrace to the 0,236 price level. That level is very important because that is going to be our entry. Okay, this is where we are going to be entering our long setup. All right, this is why. Okay, let's put a circle around there. Okay, once we see price retrace to this level, all right, we then put on our trend-based fib extension tool. This has 3 clicks in it. First click is the bottom of the engulfing candle. Second click is the top of the engulfing candle. And we then drag it out horizontally, just like this. Now, what does this bring up? This brings up 2 price levels, okay, which we can use for targets. First target and second target. However, with this strategy, I always aim to reach either the middle band of the Bollinger Bands or the top band of the Bollinger Bands. And if these price levels coincide with the middle one, because what we could see is that this middle Bollinger Band could trend lower and just meander against and underneath this 13785 price level for the fib, yes, and then we could see that this level, it reacts nicely with the middle Bollinger Band, which could then present us with a nice target, right? Or we could see the middle Bollinger Band creep upwards against the 1.6618 fib level, right? Which coincides nicely with this top level, all right? So we are always looking for confluence. Where is price more likely to reach? Okay, so once we've done this, we then put in our long position tool, all right? And we would enter, remember, on the 0,236 price level, just like this. We would place our stop a few pips below the 1 level or the bottom of the bullish engulfing candle. All right, and we would always aim for a 1 to 2, at least a 1 to 2 risk to reward, right? Because we want to make the strategy worthwhile. We want to win more times than we lose. And if we lose more times than we win, we need our risk to reward to be as high as possible. All right. Now, usually we would actually like to target the top of the Bollinger Bands. However, we know that this line up here is previous daily, right? It is a resistance zone that price has struggled to break on the daily time frame. So I'm not going to target this again, right? I'm not going to target above it where the band is currently sitting. I would rather be conservative, right? Take my 1 to 2 risk to reward and be done with the setup. However, like I mentioned at the beginning of this video, we cannot just jump into the setup unless this candle closes within or above this previous zone of resistance. All right. So this is a new little setup that I am working on. I'm still busy backtesting it. However, I just wanted to show you guys because it's actually quite interesting to see how different pairs or different markets react to different setups. All right, and this is one that I found on the DAX or the NASDAQ. It's an indice strategy. To me, personally, that is what I am looking at right now, right? It seems like it works well on indices in the 4-hour time frame. I haven't tested it yet on the shorter time frames because you guys know that I am a high time frame swing trader. So I always look for a strategy that can benefit me and my lifestyle and my personality, right? And trading on the 4-hour is definitely something that does that. All right, so let's wait and see, guys. If this candle does not close within or above this yellow zone right here, we will not be setting up a pending long position. It has 12 minutes left. However, if it does, then we will. If it doesn't, then no harm done. We'll wait and see what the next candles do. However, we have had rule number one clicked, and that is a piercing at the bottom of the Bollinger Bands. We have still not taken out this area right here to the left of it, so we are still looking for long positions. So, on that note, thank you very much for watching. If you found this information helpful and valuable to you, please go ahead and hit that like button, hit that subscribe button, leave a comment in the comment section. Let us know what you're thinking about this particular setup. Do you think it's going to be profitable? No, maybe. What are your thoughts? Guys, thank you very much again for watching, and I will be seeing you all in the next one. See you later.